right, in this video, I want to showcase how to get into a trade that doesn't involve ICT. Now, I know it involves trading two different models, and it's better to stick with one model. However, this is sort of like a very simple strategy that I've used for years. It actually has an extremely high success rate on YM, also known as the Dow 30, US 30. And it's quite often way cleaner than the Nasdaq, and I'll be talking about that a lot more and showing that. So, like, you're not always going to take liquidity out in this case, and you're not going to have an ICT model, but it is still nice to hop on a trend when your target, the main target for the day, is such as a daily previous high or low, or you have a high time frame fair value gap, which is the draw on liquidity is nearby, and you want to hop into that trend. So here it takes off. In my last educational video, I showcased these cells here, displacement over these breakers in here. These areas here are not taking adequate amounts of liquidity in the market, and it's just wanting to trend up. So as you can see, there's one there, and there's another one here, right, in macro up here, right? You have this high, and then you have this displacement down here over this breaker here, right? So you can see that they don't work, and the trends are up on the 15-minute. They're also up on the 30-minute and the 1 hour, but really we're paying attention to the 15-minute trend and what the 15-minute trend is doing. I will be showcasing an exact way to trade this model and entry as well. So here you can see that the market pulled back here and it put out a sell signal here. Okay, the 20 crossed over the 50 right here. Now the trends are up, so that is not our signal right here. What we're looking for is we want to know what the draw on liquidity is for the buy, because the trends are up. So the draw on liquidity in this case, it's obvious to me, is there's a daily previous high sitting right here with this daily fair value gap right in here between the two red lines. So you might have been going for all these sells, but really you're just looking for a buy entry. And I know that you're buying in a premium and not selling at a premium, but I'm telling you that the trend is your friend a lot of the time, especially when you have a target and a draw on liquidity, a major draw on liquidity like this up here. And then we have this buy signal here. So this is still based on smart money principles. It's still based on, because we have a draw on liquidity up top. We're just hopping into this trend, and you can go back and you can back test this, and you'll see that this pays out really well within the right context. So the best way to get into this trade, you see the candle close up here. And if you look and I measure it, the top of this candle, like we're 27 points just to the EMA, and then down to the low down here. Mark that low in so everyone can see it. This is also a smart money concept as well, is you want to take a GAN box, go to your low, and then the signal came out here, and then keep chasing the high with your GAN box, bring it out. And what did price do? Made a high, came down, and went below the 50% of this PD array down in here. Okay, so smart money wants to buy below on all time frames down in here below the 50. Okay, so now that it went below the 50, you still don't have an entry. You have two entry options, and one of them is right. You can see a sell also came out right here. The 20 crossed over the 50 right here. And you can see that it put another one out. It's hidden behind this candle right here. So that could be your entry as well. And you want to be aggressive with it. You don't want it to pull back anymore. And you can see we have a beautiful target all the way, paid out 100 points. It broke the high. And if your stop loss, if you know how to trail your stop loss properly, you would have waited. You'd be somewhere in here, broke the high. Your stop loss is down in here. You're trailing. As soon as it breaks that high, you can see it respected that fair value gap right inside here. You want to aggressively take your stop loss and drag it right to the wick of this fair value gap here. So now you're sitting pretty at 36 points, and then it just keeps going all the way to a 1 to 2 or a 1 to 3 here. If you want to know the name of this entry, it's actually called the kill shot entry. The kill shot entry is very effective, and works very well, but it must be on trend. So if anybody wants more on this kill shot entry based upon ICT principles and smart money principles, I can start showing you a lot more of this and how it wins and how it works, especially in the summertime when price trades this way and doesn't necessarily always go for a raid or a hunt on liquidity.